When you look at CAT, it's something that we've already been talking about. It's the effect of things outside of the United States. U.S. construction results were actually pretty good if you read the CAT report. It's at that ex-U.S. revenue, which Caterpillar, it's a big part of their revenue. And so I think if you think about the potential bleed of what's happening in China, in Europe, this is not just a tariff situation. It's actually a global economy situation, and I think that's what's going to sort of have investors focused over the next several days.
Yeah, Jim, largest EPS miss in a decade. That's according to Bespoke. You were looking for good results. What in the world happened?
Yeah, well, China is what happened. I mean, they're very specific about it. We put up a stat there that Asia Pacific was down 4%, but they highlight in their earnings release that countries outside of China they saw good growth from. It was all China. So the question now is how many more of these reports do we need to see before it becomes clear that China is the issue? We've had it from Intel, we've had it from Apple, Nvidia, CAT. So clearly, both sides now have to realize that to continue on the path that we've been going with this trade war is economically suicidal, and I don't think both sides or either side are suicidal.
So why are you buying more CAT today?
Well, because if you look at the, first off, it's predicated on the belief that there will be a deal, as I just said. But if you look at the midpoint of the range that they're guiding for, 12.25 versus where they put in earnings, I think it was 11.22 for 2017. That's 9% earnings growth, and you're getting that for about 10 times earnings. I mean, that's for a company that will have upside.
You think the global economy, I'm sorry, you think the global economy is going to get better anytime soon?
If you get a China trade deal.
That's going to solve all ills?
Yeah, I do think so, because I think what you're seeing right now is construction, not just in China, but around the world, is at least on pause while people try to figure out where should we be building our supply chain? Where should we expand in terms of a factory? It's hard to make those decisions when you don't know what the terms of trade are going to be.
Joe, I believe that. I'm not sure that you may get some relief in the marketplace if you get a deal with China, but you're not going to solve all the world's economic ills just from getting an agreement, are you?
So on Friday we began the show. I said I love the market. I said I love the market because the market was higher on a day where it had every reason to be down. And what do you find out? You find out that afternoon that you're going to get an end to the government shutdown. That's why the market was higher. Then you go into today, and to your point, the Dow is down close to 400 points as we speak. There has not been a bounce at all. Listen, on all these new trading systems, there's something called sell 50% of your position, sell 25%. You could basically go in and sell across the board. I sold 25% of every position I had today. Why? Because I am suspicious that the damage is already done, to your point. The damage is already done to all these economies, included here in the U.S., that basically in the U.S. we had a full house. We blew that hand. We now have an economy that's beginning to contract. And, Jimmy, to your point, even if you get a resolution, I'm not necessarily sure that you can restart the Chinese economy at this point because they've amassed so much debt. It is a different situation than 2016. It is China, though. It is China, though, that is so negatively impacting the global growth outlook. And that is for certain, specifically as it relates to Europe itself. I just see this softening as a much bigger problem.
Right. I mean, even Nvidia mentioned China. Among the issues that they're seeing, their high-end chip orders were slowing. Data center remains a real question. You have the China weakness. I think you take both of these reports, and if you're bullish on the market long, you've got to be worried. There's no other way to take it.
I think you've got to be worried if you don't think there's a China trade deal coming. And by the way, let's talk about what form that takes, okay? We can say what it doesn't take. If you get tariffs going up on March 1st, that's the opposite of a trade deal being constructed by both sides. You know, I think we have to also pay attention. Joe, I know you know this. There's been tremendous stimulus in China. Eventually, that works its way through. They've been doing it for a couple of months now, both on monetary and on the fiscal side. That takes a few months to work its way through. That is going to work its way in there. But let me be clear. If you don't get a China trade deal, then these are high prices in the stock market right now.
You're buying stocks on the hope that you're going to get some kind of trade deal.
Expectation. Hope is a bit of a pejorative word.
But I mean, it's not expectation, it's hope.
It makes
sense. There's nothing to believe other than repeated weakness and commentary about what's going on in China that there's going to be a deal today, tomorrow, next week, next month.
You've got talks going on this week. And it doesn't make sense, is my position. It doesn't make sense for both sides to go into an economically suicidal position of continuing this trade war. Both sides.
I agree with Jim. And I think it's okay to analyze the situation and say that we'll come out with some sort of deal, which I believe will be, we'll keep talking. They'll give us some stuff, and we'll keep talking and extend the drop-dead date. But I also believe, to what I think you're alluding to, is that when you peel back the onion, okay, that it's not going to be, this is not the cure-all. in terms of a China deal. China was slowing precipitously before this. You take a look at their non-performing loans, they keep extending them, they keep ballooning. They basically have a bankrupt bank system, and the government keeps bailing them out. So I think you've already cast the die. And by the way, other economies are much more dependent upon China than we are, such as Germany. And once you start that reversal, as you did in the U.S., the budget shutdown, it's difficult to turn around, particularly when you're at below zero rates in Europe already.
Let me ask you guys this. Shannon, I'll ask you. Are we on the last days of the Christmas Eve bounce back, right? We had the big sell down. We've been in a move largely higher over the last handful of weeks. Are we on the last moments, the last fumes of that?
I think we're up over 13% since the Christmas Eve sell-off. So if you think about that in perspective, the one thing I don't want to jump all the way over the Nvidia results and just kind of go straight to CAT from a global growth perspective. I think what I found most interesting was the effect of deflation in that report. So if you think about it, you saw Apple. Nobody wants to pay the big prices for the handsets.
Nobody wanted to pay for the high-end chips, right? They were waiting for the prices to come down. Now they got their move.
This is a sign of a deflationary environment. And if you're looking out, that's going to affect everything from the yield curve to purchasing to us as consumers.